But we were in the tech sector, and what you were saying, the 650,000.
Yeah.
Pakistan obviously is a significant population, over 200 million. So there's certainly headroom for growth. If I have an opportunity to work in an offshore entity, and as you said, maybe earn foreign currency as well, but taking the risk of founding a startup, what drives people into this startup journey then?
I think purely from startup journey, one thing that I wanted to, so I could hear when you were talking about the report. So a couple of things that I would like to, first thing is that I think obviously you mentioned that tech sector as a whole has outpaced the overall economy. I think that's a very important takeaway in this entire thing. Even though, and this is not just purely by GDP, right? So no matter whatever metric you look at, tech sector has pretty much outpaced the overall economy. So another metric that you can see is the market performance on stock exchange. So tech sector as an index has outperformed. And I'll take you back to I think 2021. There was a Pakistani company, a new tech company was listing. The stock exchange still has very few tech companies. No company from the new age as such. They are all still very IT services oriented companies. There are a couple of new age companies, but not on the main board. There are a few, but on the main board, and that company, I think Octopus Digital is the name. When its book building process started during the IPO, it was subscribed within an hour. And by the end of 2 day book building process, it was oversubscribed by 27x. And that just gives you the idea about the local appetite among investors for technology sector. We are mostly talking about IT services because it's dollarized, it's export oriented. So but there is a massive demand, and generally that is part of the reason why technology sectors multiples have typically stayed higher than all other sectors, even with high growth sectors like food and beverage, where there's good dividends and where there's still dollarized growth, because you have big giants like Nestle's and like Shan Foods, not Shan Foods, Nestle Foods come on the market. The technology has outperformed those sectors, and if you go by Bloomberg's own classification, software as a whole has a pretty high PE, pretty much on par, if not higher than our region. But lately it has come down, which creates opportunities for other investors, not just local investors, to look at the sector. So I think that is one thing in terms of growth of employees. I think that is still the missing link. We have gone 600,000, but it's far from enough. And part of the reason is that, so there are you can think of there's three areas where the workforce is coming from, right? Firstly, workforce is people with CS degrees or some sort of IT degrees and full-fledged 4-year programs. That number is around 25. Every year, there are around 25 to 30,000 people graduating with a technical degree. That obviously does not include engineering degrees, only the CS degrees or associated software engineering, by whatever name you go by. That's one component of the workforce. The second component is people who don't have a 4-year degree. Maybe they've done a short course, maybe they are self-taught, maybe they've learned Coursera or something. And obviously the third component of the IT workforce, basically the non-technical workforce, the marketeers and the finance people or whatever other roles you have. This first part is the most important one. Technically graduates, and that's the base we need to increase. That's the pipeline we need to increase, and it will essentially help us the most in the longer term. And we are lacking. What the industry is trying to do at the moment, varying levels of success, is that it's not entirely possible to increase the pipeline. That's mostly the government's job or the education sector's job. Industry is not necessarily in the business for education. They can be, but they are really right now. So what do is leverage the talent available in other STEM fields. Pakistan has like a sizable portion of, I think that number is around 240 250,000 or more people have form of STEM degrees. So we're talking about science, engineering programs, we're talking about physics, we're talking about math, stats, and so on, graduating every year. The industry is trying to retrain them for IT services, for core technology skill sets. Unfortunately, over the last 20 or so years, this STEM segment has gone missing from the core industry. Traditionally, a lot of bankers, state bankers would be math graduates, physics graduates, stats graduates. With the evolution of BBAs and core business degrees, their importance has gone down, and a lot of math graduates now tend, tend go toward academia instead. Even though they are qualified enough, they are trained enough in logic, in problem solving, to easily adapt to any industry or technical roles. So I think that's a retraining which is in order, and it would be a win for both the industry and the candidates themselves because they'll get better roles. So I think now to answer your question, purely on the software side, there's a major FOMO. There's a major FOMO actually, because one player driving that FOMO is this Pakistani company I mentioned early on, Systems Limited. It listed on the stock exchange. It's growing at 80-90% year on year. And it's an old company. It's not a new company. It's a sizable company. It's adding like 1,500 people every year to its payroll. And it's growing pretty well. Has high margins, like net margins, I think 28%. No, operating margin, I don't remember the exact numbers, but like net margins in double digits and towards 20%. So people, investors, industry, the businessmen, they look at that company and they do see, okay, the margins are healthy. And obviously, Systems is just one large company. There are hundreds of smaller companies which have possibly better margin, right? Which have high growth. One company, for instance, and last year, Gary Day exited one of its subsidiaries, Cloudways, to DigitalOcean for $350 million. It was an entirely bootstrapped company. So you've seen those success stories, right? And it's not just on the export side, but you've seen the export side as well. There are a lot of success stories which appeal to the businesses. And the result is that a lot of businesses are now opening in IT service. Almost 15% of all new businesses, registered new businesses at least, are now IT service companies. It has been the second fastest growing over the last 3 years and second fast in terms of new company incorporations. And second fastest because there was an amnesty going on for real estate. Despite the incentives for real estate and lack of incentives for IT service, IT was still the second largest sector in terms of new company incorporation. And you have some of the major players in the economy. So I'm talking about possibly the largest or second largest tea player in Pakistan or one of the largest textile exporters starting their IT services subsidiary. They've made the investments. So a lot of companies are now going towards IT services because, as I mentioned, there's been that unfortunate or fortunate realization that you need to increase the dollarized earnings in order to survive or thrive. Then setting up an IT services shop. Unfortunately, at least in my view, the businesses might differ. So what has happened is that even though that realization has set in, a lot of companies have decided to go on their own rather than partnering up with companies that were already in the game. So, for example, if I am a big textile company, let's say doing $200 million of annual exports, and I want to set up shop for IT services, I would much rather invest $2-3 million and set up everything from scratch than buying up a company with $200,000 or $300,000 of revenue at basically the same price. That has been an unfortunate reality is that there's not been a lot of mergers, acquisitions, and I'm talking about very early stage M&A. So Pakistani businesses have shied away from that. And the result of that is when you have structured organizations trying to set up subsidiaries in where they don't know a lot about, and they try to do everything by the structure. There is not that hustle mindset, which historically has driven technology, right? In every country, not just in Pakistan. Unfortunately, because of the bureaucracies and the typical structured organization, those new shops haven't really scaled the way they should have. Would have been far better and far cheaper if they had just acquired a couple of companies and started from level 2 or level 3. So that hasn't happened.
And it's also, if you have the acquisition, then you have founders who exit and then go on and found the next company. And so an ecosystem needs the exits as well to become angel investors, seed investors, and that creates the next wave. So certainly agree with you. So in your report, the three biggest sectors you highlighted were e-commerce, FinTech, and then transportation. Give us like your perspective across these three, because they were like 85% or so, right, of the market.
E-commerce is something. So when we're talking about e-commerce, let's look at two different things. We're talking about traditionally what has been to an extent, it's still the more relevant part of the e-commerce segment. It's the B2C e-commerce, which is where e-commerce has typically started out from in most markets, right? E-commerce has started out as more of a convenient play, targeted at consumers, and that is the case for Pakistan as well. Pakistan is no different. It started like very early on at the turn of the century. It started out with few players. Some of them went bust, some of them survived. And then 2020, 2012 came into the picture, backed by Robert. I'm going into a little bit of history here to set the context. So the RAS came into the equation, then Alibaba came into the picture, then there was a lot of money with discounts, and when the discount campaign started, they started before Alibaba as well, but they amped up after Alibaba because there was more money available. So e-commerce became like a familiar phenomenon, even if the revenue or volumes were not where they should be. E-commerce became like a pretty familiar phenomenon to Pakistanis, or at least urban Pakistanis. But what happened was that while with the likes of Daraz, who were basically a marketplace, they wanted more people to sell on their platform. So they started aggressively recruiting people. So when Daraz was acquired by Alibaba, which is around March or May 2018, Daraz had around 5,000 sellers. That number stands at around 100,000 right now. So we have pretty decent base of in commerce purely on B2C e-commerce. And so early on, it was B2C e-commerce which got most of the funding, right? You had the gallery getting some of the deals priced. But what happened in 2020, part of the problem with B2C is that at some point when Pakistan's economy started to unravel, even globally, there was, I think, 2020 onwards, 2021, specifically, there was a general trend for B2B companies to raise a lot of capital across sectors. You had in India, you had books and all raising big numbers. You had the same thing happening in Indonesia. You had the same thing happening in Egypt. I think again, that was part of the global phenomenon, and the underlying problem was that obviously all of these countries have significant distribution systems to serve to their populations. And those distribution systems are very like the mom and pop stores, if you will, right? Those distribution systems are pretty much the same as they were like in 90s or 80s for that matter. Or if you go back at maybe 1880s. So there is a need to digitize those distribution systems to equip those small shops with digital tools and help their businesses grow. And that's the proposition which gained steam in 2020 and 2021. And as a result of more capital available, more capital finding similar use cases in comparable markets, a lot of Pakistani B2B companies started raising money. And in 2021 and 2022, it was actually B2B which was driving bulk of the funding. And in B2B, there was specifically some specific e-commerce companies. So you had Bazaar, which since founding in 2020, Bazaar has raised $107.8 million. Then you had Telo, which has raised around 46 and a half. Or so a lot of e-commerce funding has been toward B2B companies. So that's one thing. Obviously, B2B is a longer term play. It will take time to digitize the distribution systems. On B2C side, funding has gone down, but the more positive takeaway on the B2C side is that selling growth has continued, as I pointed out, which is the more important phenomenon, right? Now, there is a massive gray economy in e-commerce in Pakistan, which someone needs to bring online or someone needs to streamline better. But Daraz, whether it's Daraz or the Gallery, any other formal companies, only a fraction of the overall e-commerce space. Let's take a step back for a second, right? So Pakistan's B2C e-commerce, traditionally it was about electronics, but electronics still is a pretty big portion. But now fashion is becoming a major driver of that growth. There are a couple of reasons. Obviously, fashion has a lower average ticket size. The electronics is because of the devaluation, all electronics items have become a lot more expensive. That sector has faced some pressure over the last 2 years. Fashion, on the other hand, still manages to grow because of we have localized supply chain. It's not as dependent on how dollar moves or how the rupee moves. So there's been an active shift towards fashion in e-commerce. And what you've seen is that even though, for example, Daraz accounts for a very minor share of fashion e-commerce, still mostly dominated by traditional retail companies. So the likes of Sapphires and the Khadis. So these are giants in Pakistan's retail industry. And they've set up their e-commerce shops. Those e-commerce shops overall are far bigger than Daraz. So roughly, like a large e-commerce store could be doing somewhere around 1.5 million shipments a year. So that's a pretty decent number. And that's one thing, right? But again, the more to track as well is not the large retail outlet and their e-commerce shop, but it's actually a small seller. And that is something, if you're going through stories on Instagram, I bet on my life that every fifth or sixth story will be an e-commerce company ad. So there is like a ton of new e-commerce companies which are coming online, which are not really registered. They're literally just starting their social media pages and they start selling stuff. And there's like a huge pipeline of those companies, which obviously it's not possible for us or anyone to track them at the moment, but they're large, sizable companies. For example, there's one company which has like at least 3 of Pakistan cricket team's largest superstars as brand ambassadors. There's another company which has another 2 or 3 that I can think of, again, cricket superstars and a couple of actors as well. So they have enough investment backing them or enough revenues to find not just Pakistani superstars, like superstars that have, like I'm talking about someone like Awad Khan who has done Bollywood movies as lead actor. Right. So you have small brands everyone is trying to build their own brand. That's one thing. And some of the brands have become successful, not just in Pakistan, but globally as well. And in e-commerce, this is what essentially drives the sector. It will be this segment of the e-commerce which will essentially drive M&A, in my view, because you'll have retail outlet buying them rather than VC companies buying them. You'll have retail outlets doing the M&A. So I think that's a very important sector. And these are high margin, healthy margin businesses as well. These are not negative margin businesses as is often the case in VC, right? Here we are talking about companies which are free cash flow positive for the most part. So there's a major difference. Now, the second thing is FinTech. Personally, it has been one of the more exciting areas. And luckily, because FinTech is often regulated, it's possible to track the industry with far more data than it is possible with other sectors. So as a whole, FinTech has been growing aggressively. Just take the fact that the largest bank in Pakistan is now doing 90% plus of its transactions digitally. 93% of transactions. By June 2024, mobile banking volumes will hit 1 billion transactions, which is the major milestone. So there's significant growth in the traditional finance industry in terms of transactions. And on the new age FinTech side, there's been a lot of activity because there are the regulatory frameworks available. For example, the digital bank license has been awarded. There's EMI license available for anyone to do neobank, payment bank basically. And then there is another license available for payment systems, which is gateways and sorts. Then you have the lending side where you can get a license within 3-4 months maximum, or maybe 6 months maximum, to start lending to NBFC, non-banking finance company. And a lot of companies, I can think of at least 5-6 companies with VC funding which have gotten that license. They've started lending. Finja, we started lending to consumers or SMEs. Additionally, the first wave of FinTech was all about wallets. Customer experience is a big factor. A large percentage of banked people are already using mobile apps from their banks. And that's where they're doing most of the transactions. That's where most of the money is being moved. So digital wallets only get a small portion of the transaction pie. So what everyone has been trying to do is that move from purely transactions or purely from payments towards lending. And that has been the bigger driver of FinTech over the last year, at least 2023. Payments has taken sort of a backseat. And then you had players, you had two sorts of players. You had players doing financing to mostly other SMEs. And then you had a couple of players doing infrastructure, banking infrastructure. So typically banking as service players. So FinTech has, so that where the FinTech activity is happening, even though it has not necessarily reflected in terms of lending as well. There's been a lot of growth, but that growth is not necessarily driven by Pakistan origin companies. It's driven mostly by, or not necessarily Pakistan founded VC backed companies. That growth is driven by other companies with other sources of financing elsewhere. OP is one example. OP backed company Seed Trade has done exceptional scale in terms of nano lending. Then you have similar companies, again, with local sponsors doing similar nano lending and again, pretty big scale. VC-backed companies are not there yet, but in terms of transactions, they are doing well in terms of building that network. So just to give one number, in 2021, the first digital wallet became commercially live in Pakistan. Since then, the digital wallets have combined, issued, or opened 2.7 million accounts. It's pretty high if you compare it with traditional banking. Or another way to look at it is that in less than a year, digital wallets have onboarded 72,000 freelancers on their platform. So I was talking about the freelancer economy. In 1 year, they've onboarded 72,000 freelancers. That's a pretty exceptional number. Sadapay is the poster boy leading this. In FinTech, I think that's the biggest thing is that there's a natural evolution of financial services being delivered digital. And that delivery is going to happen again. Same for e-commerce. People will buy online, even if it's not buying from new companies. They will continue as a percentage of my total spending. E-commerce's share will grow, or as a percentage of my total transaction as an individual, the share of digital will grow. Now it's literally up to the industry, whether it's the traditional industry or the VC-backed industry, or maybe the private equity-backed industry, if there is that, to get a piece of that pie. So even if the overall macro economy is not doing well, my pie, let's say I am spending the same 1,000 rupees, but now I'm spending 300 of that rupees digitally. Previously, I was spending 100 rupees. So that's still like a 3x growth, 0.5% on an annual basis. So the sector is still growing, and that is the good thing about both fintech and e-commerce. One area where there's still a lot that needs to be done is transport and logistics, because at the end of the day, this is going to be the single most important driver of the economy. It all comes down to logistics, right? How good is your logistics infrastructure? Whether you have the trains to move goods from one place to the other, or the ships to move cargo, export cargo, and it matters, right? So I think everyone realized the importance back in COVID-19 when there were not enough containers available, even though companies had orders. There were vaccines available. They were not contained. We had containers shortages and so on, whatnot. So I think logistics should be the biggest focus area for Pakistan. Unfortunately, logistics has gone down in importance over the last few years in the VC landscape. So back in 2019, logistics was easily the biggest driver of VC. Pakistan's earliest 100 companies were logistics driven. Kareem, obviously, it's not a Pakistani company, but it's still a transport and logistics company and very important to the overall startup ecosystem of Pakistan traditionally. So that's logistics had that mobility wave coming in. And then, unfortunately, that mobility wave fizzled out, not just in Pakistan, but globally. Or it matured, if not fizzled out. And from a VC perspective, there was enough. There were exits had happened. There was not a lot of incentives to investors to keep deploying more money into this mobility space. So that is logistics. But around 2020, 2021, what started happening was we had a lot of companies coming for supply chain digitization from freight digitization, basically. We had BridgeLink, which got like $10 million seed round. We had Trucker. A lot of these companies raised significant funding, somewhere around $10 to $15 million. But some of those companies haven't done too well, unfortunately, which creates pressures from the sector, and it reflects on the limited deal flow, because some of those portfolio companies of investors haven't done well, or are still in the survival mode rather than growth mode, right? So that changes the gears. Logistics is so much macroeconomy driven that anything that happens in logistics, unlike fintech and e-commerce, my share of spending does not matter as much as in logistics. So it still requires those infrastructural investment. And honestly, logistics is more of a private equity play in any case. You need players buying their fleet. Perhaps asset light is not the best model. You need players who can build their balance sheets as well, rather than just trying to be a software play. Because traditionally, if you look at the biggest logistics companies globally, core logistics companies have always been very asset heavy. And Pakistan has that still missing to an extent. Not entirely missing. You had, but a little bit missing from the VC side. So there's activity going on, but they often go and access other sources of capital rather than VC.
Correct. Let's talk a bit about the early seed investor side of things. So we talked lots about the startups and the economy overall, but where do startups go to get funding unless they bootstrap? What's the angel investors? Is this rich families, or how does this work in Pakistan?
Traditionally, Pakistan unfortunately doesn't have a very healthy investor ecosystem, right? You have, let's say, private equity, obviously, not for early stage. I think we can agree to an extent that for early stage companies, VC is probably the best form of capital, or at least from a founder perspective, it is the best form of capital, given the ticket sizes, given the dilution VC edges out all other forms of capital. Unfortunately for Pakistan, VC is arguably the only form of capital that is available, right? Local corporates are almost entirely missing from the entrepreneurial ecosystem. There are few which have made investments, but I don't think there will be any local corp which has made more than 3 investments till date. Traditionally, Pakistan investment activity, early stage investment activity has been all driven by venture capital. We have very few local firms, right? Local firms, we have like around 7, 8 local firms. So most of the capital deployed actually has come from foreign investors. Back in 2021, most foreign investors came, and it's when most money came. Once the foreign investors pulled out, that money pulled out eventually, because the local investors don't have the funds right now to deploy capital. Other than 2 investors right now in Pakistan, most are looking to raise a fund. So Indus Valley and Zain Capital, from what I'm familiar with, they are the ones who have funds available. Zain Capital is most active, raised its first fund much later, in somewhere in 2021. So they still have capital. Others are still trying to raise a fund, new fund, because they exhausted their old funds. So you have that problem going on with Pakistani investors. And when Pakistani investors don't have the money, obviously it becomes more difficult for them to bring on international investors. And that has been the supply side of capital has been a challenge. Unfortunately, the local ecosystem hasn't stepped to the VCs. So if you look at the count of unique investors by type, it's a VC show. In VCs, it's a foreign VC show. Local investors account for, again, I don't remember the exact number, but it's somewhere around 20-ish% of all, in Q4 of 2020, around 20-ish% of all investors were locals. The local investors are very much missing from the equation. I'm talking about big companies, even like the likes of, for example, Pakistan's biggest bank, HBL. It has set up a VC fund, but it has made 2 deals in 3, 4 years. Similarly, for another bank, most of the corporates haven't yet made any investment. Like if you look at the 10 biggest companies by profit after tax, maybe 2 would have made a deal in a startup. So that's still very much missing. The equities is literally non-existent in Pakistan. Bank financing is very constrained because of interest rates at % policy rate is at 22%. So you cannot possibly have a lending ecosystem or a financing ecosystem at those rates. So which takes us back, VC becoming the only form of capital. While VC is the only form of capital, VCs themselves are struggling to raise capital. So it's a very difficult situation in terms of supply.
New fund should be launched to also benefit Pakistan.
So I think two things can be done. One thing that's already happening to an extent maybe it should happen in a better way or a bigger way at least, is that the Ministry of Information and Technology in Pakistan recently set up its Pakistan Startup Fund, which in theory works like a startup fund, but puts matches the investor amount up $300,000, and it's equity free. So it's essentially grant money, but the prerequisite is that if I am raising this capital, I need to have commitments from other investors. So it helps me complete the round. Government goal is not to get equity. The goal is to ensure that the deal follows through, that investors are de-risked. They don't have to invest, let's say, for $1 million round, they get the same valuation as they would with $1 million check, but they actually have to invest 700,000. From an investor perspective, their goal is targeting investors, then startups as such. The second is you just have to find a way to tap, right? So I know a couple of VCs are trying for that. They are trying to focus on a specific strategy or on a specific sector to raise funding from international financial institutions. And I think that's a smart approach because that's a non-cyclical capital. So if IMF is making a commitment or IFC is making a commitment or IFC is making a commitment, that will be non-cyclical. Or if Gates and Gates Foundation is deploying in a fund in that non-cyclical. And that is something we need to do a better job at in order to raise more capital from not just from market-based sources, but also from international financial institutions, where there is a lot of drive already. And that done, generally a lot better job at raising, from a startup perspective, a lot better job at raising from VCs themselves, from small foreign VCs abroad, because even though they are cautious, we know they have the capital level. There is no shortage of capital as such, because 2021 and 2022 saw tremendous amounts of fundraising globally. Right? So there are funds available. Obviously, whether those funds are available for Pakistan or not, but that's a question. But I think they're available with the right business. Like, I don't think investors would be allergic to investing in a company which is growing 100%, 200% year on year and has a net margin of 15, 20%. I don't think any investor would like to say no to that. So it's also a matter of building those fundamental businesses. Now, which sectors have those opportunities? It's up to the entrepreneurs to find. Like globally, SaaS is one area where, again, Pakistan has been missing. So it's literally the entire field is open. Go and build something SaaS. Could be a micro SaaS. It could be a micro SaaS studio. Like you don't have to be, we've seen in 2021 and 2022, we've seen companies raising for building a portfolio of products or services, right? It's also a matter of finding those opportunities, which I think the ball is in the founder's court. A lot of Pakistani companies are, for instance, now trying to expand to MENA and raising one for MENA rather than Pakistan. Even if Pakistan's fundraising has been shaky, MENA has a thriving market with local capital available. So a lot of Pakistanis, and obviously MENA traditionally has been where a lot of Pakistani businesses have expanded. A lot of Pakistani businessmen have made their fortunes from Dubai, from Sharjah, from elsewhere. So it's a natural extension, even from a historical point of view. It's something we are used to, especially in trading businesses and in other service businesses.
Totally. Brings me back to like your country comparison, right? You compare Pakistan and Nigeria, you have them next to each other in the table, right?
I think the problem is that every region has a nucleus of sorts, right? So, for example, if you look at Southeast Asia, the core nucleus is Singapore, obviously, when it comes to fund. When you go and then you add some level, you have Indonesia. Philippines, for instance, in terms of VC funding, has not done as well, even though it has done tremendously overall as an economy. right? It's a great economy, especially in terms of electronics, goods, sports, and whatnot. Philippines has done phenomenally well. But in terms of VC funding, Philippines is not nearly on the same level as Indonesia. And Indonesia is not yet nearly on the same level as Singapore. So East Asia has a nucleus, like it's the center of attention, right? And MENA has that nucleus. Traditionally, that was UAE, but now Saudi is becoming that. When we go to Africa, traditionally Nigeria has been that nucleus of that African ecosystem. Kenya, to a lesser extent, Egypt is emerging as a major force. In South America, you have Brazil, right? Obviously, everything works out. Brazil, largest economy by far, more population than all other combined. Pakistan, despite being a country of 240 million people, is in a region where one of our neighbors is China and the other is India. So it makes things very difficult for and be part of the South Asian equation, right? Unfortunately, South Asia as a region does not have one of the least connected regions in the world, despite the cultural similarity of the deep conflicted history. And what happens is that most of the capital obviously goes to India, and because of political tensions, there is no cross-border flow of trade, cross-border flow of knowledge, cross-border flow of business activity as such. And there's small sharing between India and Bangladesh, but again, it's pretty small. So South Asia, there is no South Asia strategy for anyone from an investor point of view. There is an India strategy, there's a China strategy, there's a MENA strategy, there's a Latin strategy, but there is no South Asia strategy, right? And I think that is something that which affects both Pakistan and Bangladesh. How do we overcome that? And that's, for better or worse, it is just how it is, right? How we navigate that dynamic with India or with the rest of the world, it's literally up to us. Bangladesh, for instance, has a better or more robust economy than Pakistan, but unfortunately has well in marketing it beyond textiles, right? Pakistan, despite very fundamental flaws, for instance, does reasonably well in many other metrics. For instance, if you compare Pakistan's technology sector to Egypt or Bangladesh, they even just export IT exports. Pakistan stands out like far ahead of others. So Pakistan hasn't done too bad in that sense, right? And now it's a matter of how do you market that, whether you're marketing. And if you go back in time, somewhere around mid 2000s, Pakistan became a market hot enough for everyone to take notice. So that India strategy became a South Asia strategy back in 2000s because there was a vibrant financing ecosystem. New banks were setting up shop. RBS had come in when you had obviously Barclays and Citi had like branches at every, I remember like literally every fourth, fifth corner of every fourth, fifth signal I could remember, like you could see a city, like, or 10 city bands if you were driving around in Karachi. So that had happened in the past. My only question is that obviously it can happen again. We just have to tell that story and not just tell that story, do the groundwork to tell that story. So I think we are, as far as the technology ecosystem is concerned, I think we are somewhere on the right track. There are a few bumps on the road, but overall, it's the right trajectory, especially in areas that I mentioned, right? IT services, fashion e-commerce, that's the one area, again, where we're doing well. Maybe software is one industry where we should be investing a lot more software's products. And yeah, I think that would cover a lot of ground. If we can do a bit of not so tech stuff as well, accounting, marketing services, where we have the talent pool, where we have the labor arbitrage advantage, I think it's just a matter of literally positioning ourselves. And you have to be small attempts, right? I think Aisha Khanna, who is a very notable voice on AI and this office generally. Aisha Khanna, she's from Pakistan originally. She had, I think, pretty much all, or at least a large part, the technical talent is all based in Pakistan. And I think I've seen from a talent perspective, a lot of big companies are actively targeting Pakistan. You have companies like Crossover, for instance, which recruits remote workers. It actively looks at Pakistan. You have Trilogy, you have companies setting up back offices, and a lot of big fintech companies, for instance, like by fintech, for example, BPT is doing that. Then you have another UK-based was payments company setting up shop in back office shop in Pakistan, hiring support and technical engineers from Pakistan. So that wave is already in motion. We just need to ensure that a healthy pipeline. That's all we need to ensure. I think then it should be okay.
And certainly with the work, you're doing a great job in telling the story to the outside world and keeping everybody informed, right? It's the last part of creating transparency, continuity, because you tell the story over the years and makes it much more accessible for anybody who has an interest. So I think we had the link to the report also in the event, but please do download it if you listen to it and read through it. It's very insightful, especially, again, for somebody like me who haven't really illuminating. And so thanks very much for the good work. You, yeah, like you, I've lived in different places and it always gets a local flavor. The German version of the Gerke, but in English, and then the way we transcribed it for Japanese, it sounds totally different. But you have good stories to tell always, and so we'll try to help and make this visible across our network as well. It was a real pleasure to you.
Likewise. Thank you once and much.
Thanks. Take care.
Bye.